So I want to do a quick review of source documents. I'm not going to go over everything, but I'm going to go over the main ones. Source documents are basically proof that a transaction has occurred. We need proof in case the government wants to audit us. We want proof to show that we're following the rules. Basically, we need documents for everything that we do. So probably the most common one is the cash register. Recording every single sale we make is kind of tedious. Every transaction or every cash register has a summary at the end of each day, and you can kind of take a look at the example right here. It lists by each type of payment. Amex or American Express, $222.36. Each one is recorded. We can make one transaction for each item on this list. It shows us the cash and the debit, so basically cash or bank account. Gift cards, which is basically accounts payable for us. We've already received the money, we just owe them stuff. Taxes and credit cards, what they paid and how much we're going to receive from each credit card company. So, big one is receipt versus invoice. Now, the receipt shows items we've purchased and how much we paid for them. That's the key thing. It's proof that it's been paid for. If you take a look at this example right here, we've got base price $750 and a total of $100 paid. So it shows the credit card that was used. It only shows the last four digits, but the key thing is the receipt shows what was paid. Now, on the other hand, invoice shows what's been ordered, maybe even been sent, but it has not necessarily been paid for. This is why invoice always means accounts receivable or accounts payable. So everything that we've ordered is right here, the taxes, the total, everything set up, but there's no proof that we've paid for it. So what we need is, if we have an invoice, we actually have to show that we've actually paid for it. This can be done through the bank statement. We can use a credit card statement. We can print it out, show proof, or even get a second piece of paper that's a receipt that shows that we've paid cash. So here's an example of a bank statement, and it shows just everything that we've done during the month, each item, and it's proof that we've actually paid for. If we have a bank statement to show proof, we could always attach the invoice to the proof. That way we have a record that it was paid for. And finally, invoice versus bill. It basically means the same thing. There's no proof of payment. Invoice is what we've ordered, and it's usually an irregular credit sale, something that's on accounts payable or accounts receivable, whereas a bill is a regular payment according to an agreement. You sign up for a phone, you pay a regular phone bill. This is why it's called a bill. They mean the same thing. Invoice is the same as a bill. Both use accounts receivable or accounts payable. Hope that helps. So how do we take a source document and make a journal entry out of it? So we need to look for three things on the document. One, we need the date, the accounts affected, and the dollar amount. So in this case, October 30th. And the first part is cash. Debit sales are the same thing as going into our bank account. They are cash sales. The next thing is we are receiving money in the future from Visa. So I'm going to put accounts receivable, Visa, receivable, MasterCard. And altogether, these are sales. I'll record that. When it's all done, the final transaction will look like this. The date, the accounts affected, and the dollar amounts for each one. They total $743.18, which we can see on the sales slip. The next example is an invoice. How do we take all this information and plug it in? We need the same three things: date, accounts affected, and the dollar amounts. Now, one particular thing to add in is notice the invoice number at the bottom of this. Sometimes you have to search for it. We need that number to record in the general journal. So just like before, we are going to put in the date. Now I am looking at this as if we are general engineering. We have made revenue. We haven't been paid yet, so I'm going to put it in as accounts receivable. Split it up into labor revenue, and so when it's all done, it will look like this. We will receive $241.50, but it's split into two different revenues, and we include the invoice number in the explanation. So make sure to include that. Now, if you were to flip it and look at it from the point of view of Masthead, Masthead is getting something done. They are repairing their equipment. So if we look at it, notice one change. The date is now March 8th. And so what I put in as the invoice was created on March 6th, but it wasn't received by Masthead until March 8th. Maybe they emailed it, maybe they mailed it. Whatever day that it was received by Masthead goes in the general journal.